Hey guys, welcome back to the channel. My name is Timothy, and on this channel we speak everything personal finance. And today's video is going to be a little different for our Sunday talks. I'm going to actually break down, well, not really break down, but react to a video that I saw on YouTube, and it's titled "Experts Are Saying This is Going to Be a Tough Housing Market for 2025." So I just kind of want to see what the video is about. I saw a little bit of the video, and I thought it would be interesting to kind of break it down and see my perspective of what they're talking about. And I kind of wanted to look at it to see if it's going to actually be a tough year, or if I think it's going to be a tough year for buyers in 2025. Now, I'm just a normal person on YouTube. I'm just a regular person that has a home. I have this home and then one little investment property. It's nothing serious. But yeah, so I just want to kind of watch this video and do some different things for these Sunday talks. I do like the ranting part of it, but maybe I can start incorporating talking about things that are going on in the world, or reacting to things that are going on in the world. Let's watch this video and see what it's about. I hope you guys enjoy the video. Let's get into it.
Well, I want to ask you about this because this is an economic story we're seeing playing out. One of the big stories to end 2024 has been the home buyer story. American homeowners are feeling the crunch of home insurance and property tax payments.
I could definitely feel the home insurance and property tax payment, because that's something that I dealt with being at this house. But I'm gonna let the video continue because I think it goes into kind of the more details about it. But this is something that I definitely did not think about when I bought a house, is the fact that these home insurance and property tax rates go up every year. I did not know. They say when you buy a house, the mortgage stays the same. So that's why you get a house, because you don't want to rent, because your rent goes up. But when you get a house, you get the same payment for the rest of the 30 years. For the whole 30 years, you get the same payment. And that's what I thought. I'm like, oh man, my payment's going to be $600 something for the rest of my life. Nah, not true.
That is really pushing up their monthly mortgages. The Wall Street Journal found that in September, 32% of the average single family monthly mortgage payment went to insurance and tax payments.
So 32% of the payment that you're paying for your mortgage. So that's your principal, your insurance, taxes, all those things. 32% went 32% of your money went to insurance and property tax. That is so crazy. And like I said, we get this bill every I think it's summer and winter. We get a summer and winter tax bill. And every year that bill goes up and up. And then my company or my mortgage company pays it, or it goes to the escrow account. However it works, it's kind of confusing. I mean, it's not really confusing. I just have to look more into it. But it goes to the escrow account, and then I pay the escrow account. So it's just like insane. And then with the rental, it's like now I have to raise the rates because they're raising the property tax, they're raising the insurance on that property. So I'm more at a loss. So that's why I have to raise the rental rates, which I haven't done yet. I'm probably going to do coming up this lease, but it's just crazy.
That's the highest since 2014. Analysts say the climbing cost of property taxes and home insurance, it's not going to come down, putting further burden on homeowners.
It's not going to come down. I've been in this house for 3 years, and it has not gone down. It has only gone up. So let me tell you how. So this house, it was $100,000 house. So the payment with the property taxes, with the insurance, and then I have mortgage insurance because I only put down 3.5%. The payment was like $600 something dollars. $600 something dollars. That's nothing. I mean, and then now it's at $790 or something, because there was an overage, basically saying I didn't put enough money or pay enough money to my escrow account. Now, correct me if I'm wrong, someone that's watching. I didn't pay enough money to my escrow account, so now I have an overage or underage, whatever it is. I did not enough money with the escrow account to pay for the property taxes and pay for the increased insurance. So now I have to pay more money to get this back in order. So I have to pay more money for a year to get this back in order. And I just called my mortgage company a few months ago to kind of talk about this. And it's just crazy how, the rates are just going up at the pace they are going. But it's part of homeownership. This is part of homeownership. This is all I know. I don't know if it was like this in the past, but this is all I know, that these insurances go up, that the property taxes go up, and you have to pay it. And that's something that a lot of people don't talk about. That's something that no one talked about when I was looking at getting this house hack, is that. But it's fine, because at the end of the day, I'm in a house hack, and the people that I live with, the people that live in the other unit, are paying the mortgage. They can raise the property tax and the insurance as much as they want, because then I can just go and raise the rent rate upstairs or however I want to do it. I haven't raised it because it's still been fine, because I'm not really in this house hack to make money. I'm in this house hack so I can save money. This is it. I'm in this house hack so I don't have to pay the mortgage, because I don't want to pay a mortgage right now. I want to put the money that will be going to that mortgage to other things like investments or going out to eat with my family, which I really enjoy, going out to eat, or vacation. So I'm not really in the house hack to make money. I'm in the house hack to live for free, basically. It's like I'm living with my parents because I don't have no mortgage, I don't have no rent, but I'm not living with my parents. I have the freedom to do what I want. I'm just in an apartment. But it's pretty nice. I'm telling you, if you guys ever come across a house hack or opportunity to house hack, you should definitely look into it.
If they've refinanced, or even if they got a low rate on their mortgage, they got that 3.5 or 4%, for instance.
Wow, this is going to be really.
Climbing cost of property taxes and home insurance. It's not going to come down, putting further burden on homeowners, even if they've refinanced or even if they got a low rate on their mortgage. They got that 3.5 or 4%, for instance.
Wow, this is going to be really tough on the housing market. I'm going to tell you that right now, of late, the worst performing sector in the U.S. equity market has been housing-related shares. They're under a lot of pressure. They've been sinking by double-digit percentage for the current quarter to date since the election.
Mortgage rate. As of December 19th, now we're in January, we're in 2025. This is as of December 19th. The rates were 6.72 and then for 15, 5.92. Let me tell you, so when I bought this house in 2021, my rate was a 2.75. That's butter. That's so crazy. A 2.75, and I didn't know that was good. I didn't even know much about interest rates. I had no idea. They could give me a 7% interest rate or a 5% interest rate, and I still would have been like, oh, yep, I'm taking it. I don't know, because I just wasn't knowledgeable on really buying a house. I knew that I wanted the house hack and I knew what it would allow me to do, but I didn't really understand the process of buying a house, because I just jumped in head first. I was tired. I was tired of all this thinking whether I should go buy or whether I should not buy, and I just bought. I just went for it. So the fact that I got a 2.75 mortgage rate on this house, and they're talking about it's at 6.72 right now, is amazing. So I'm not selling this house. I'm going to keep this house as long as I can. And then when I move out, this is when the hack comes in. This is where the second hack, I'm sure there's a lot of hacks in the house hack. This is another hack. When I move out, I rent this apartment, and then that's passive income that can be used to fund my next house. But that is one of the best things. So I'm not selling this house. That interest rate that I got at 2.75 is ridiculously good now. I know that. And then like the other house we have, it's a little house, $65,000 house, super small. We bought that I think going on almost 2 years ago. That mortgage rate is at like a 7.1. So we kind of bought that at the height of these mortgage rates, because as you see, we're at 6.72. So we kind of bought that up, but again, I think I was a little rushing. I was rushing it a little bit. I just wanted this year, I want to buy a rental property, and the perfect opportunity came across. I don't regret it or anything, because it's been cash flowing decently. So that's another thing. Rentals are not really all that people make them out to be. It's not that great. It's a lot of money that goes into it. And like you see, these interest rates and taxes going up makes it just cost more to operate.
Election, it's really a mess. Let's face it, you go ahead, you take out a fixed rate mortgage. Well, it's great to know that your monthly mortgage payment is fixed. But what you don't know is what your future property taxes might be, and what your future property insurance costs might be. And I want to
have no idea what your future property taxes or insurance is going to be. And one thing I know, what I'm pretty sure how this works, is that when you buy your house, like I think that's what happened with me. I bought this house and it was taxed, I think, at the rate of the person that bought it or something like that. I don't know. Something like that. But it was taxed at what the rate that the person bought it. And now it gets a new valuation and the updated, and it gets an appraisal, and its new valuation is now a different price than what it was. So this happens to a lot of people, I believe. When they buy a house, they bought it at what it was valued when the other person had it, but now they have it, and then it gets valued at a different price, which means and that price usually indicates some kind of raise in your property tax. So, like I said, I'm not super well versed on it, but I'm pretty sure that's how it works. So, you might have this payment for a year, but next year it's going to change because your property got reassessed. So, it's just insane. Like, you have no idea how much it's going to cost, and no one's going to tell you about this unless you actually do your own research and learn about how buying house works. And that's why YouTube is amazing. That's why YouTube University, they have everything you need to know. So get on YouTube, know what you're getting yourself into before you're buying a house.
Let me add one thing. I think this is important. The CPI is trying to tell me that their best measure of property insurance was up by only 2%
like I
from
love
a year
talking about this
ago.
stuff.
You've got to be kidding
The
me.
November number, you're saying the November print didn't make
number. I'm
sense to
laughing
you?
at that.
Okay,
And moreover,
interesting.
and people have to know the CPI does not include property taxes in its measurement.
There you go. So when you
it's
talk,
understating inflation.
when you see that economic crunch, and that is the story
Half
that, again,
of
Ashley, going
monthly
back to
mortgage payments to taxes and insurance. Wow. I mean, Rochester, are these high cost of living areas? I wouldn't think that they're that high cost of living besides Miami, Fort Lauderdale. But I mean, yeah, it's kind of more higher cost of living areas where taxes and insurance. But I guess imagine you get a cheap property like this $100,000 property where, if you think about it, the actual mortgage, it's crazy. I think I saw something like this I think it's this property or the other one. But the actual mortgage payment and interest is like $400. It's like $400. So if I didn't have property taxes or insurance, I'd be paying $400 for this house. Or is that house? One or the other. I think that house is even cheaper. So $400. That payment that I was saying earlier, that was taxes and insurance included. But the actual mortgage payment is like $400. So it's like $300 that I'm paying in property taxes and insurance. That's almost half. I'll be right here. I'm the borrower that half of my monthly payment goes to taxes and insurance. I promise you I am. But I'm also in a lower costed living area. I'm in the Midwest, I mean, what, $600, $700 for a whole home? That's still pretty good, but it's just kind of crazy where all your money is going to, like taxes, insurance. There's no growth in that. It's just like an empty hole that, if something breaks, hopefully insurance will fix it. You don't even know.
And Ashley, going back to the election, that is what we heard, that voters said, I am struggling financially, economy number one before immigration.
And Joe Biden kept saying everything's going well, the economy's getting better, but they did not feel better. And this is a perfect example.
Did the Biden administration not look at taxes and insurance?
Wow.
I guess now they're looking backwards, they're probably thinking, oh, we should have paid attention to that. Sorry,
Looks like they're not on the Democrat, looks like they're not on the Biden side. I don't know. I'm just looking.
The property taxes
Crazy.
are telling us something about climate change. Whether you like it or not, something is taking place with the climate, and insurers are responsible.
So that is insane, just the amount of money that actually goes to property taxes and insurance. Now, I'm sure if you got a more expensive mortgage, maybe you would not be in that property tax to insurance ratio where half of the money is going to property taxes and insurance. I don't know. But I'm telling you right now, I'm definitely probably within that range where I'm going to be soon paying more in property tax insurance than I'm actually paying towards my mortgage, which is insane. I guess my thoughts on the video is it's just part of homeownership. I mean, if you want to own a home, this is something that you're going to have to deal with, and you have to pay property taxes. No matter if you pay off your loan, you're going to always have to pay property taxes. So at the end of the day, you never really own a home. So this is why I am actually a advocate for renting. I think renting is great because you don't have to worry about these extra costs that go up. Yeah, your rent might go up, but it is kind of more predictable in a way. With these property tax and insurance rate, you don't know what's going to change. You don't know how it's going to change. And I think a lot of this stuff is just very important to know. It's very important to know and keep up to date with the things that are going around in your city, especially if you look to purchase in your city. Just be sure to know how much you're going to be paying for your mortgage and just the total cost of home ownership, because there's so many other things that go into home ownership. There's so many other things that go into the cost of home ownership. So just stay informed, Don't rush to buying a house. Don't down renting. Renting is not bad. It's good for a short term. So I hope you guys enjoyed the video. If you did, leave a like and subscribe to my channel, and I'll see you guys in the next one.